Retail investors this week have kept buying despite the market conditions through the dip. It's paid off this week. Kate Rooney is with us with the numbers. Kate?
Yeah, John, so as you mentioned, individual investors have been buying the dip we've seen throughout all of this market chaos. Right now, at least, it is paying off. So the average retail portfolio is up about 15% in recent weeks. That's according to JP Morgan. It's pretty much in line with the market's overall comeback. And they are driving an outsized portion of overall market action, usually retail participation. It's around 12% of the total. Recently, it went as high as 36%. That is the highest level in history, at least as long as JP Morgan has been measuring it. It is triple the long-term average. And then institutional activity at the same time has been what they called subdued. And Vanda Research noting a similar recovery for retail portfolios and points out over the long term, if you adjust for prices there, retail investors have outperformed both the Qs and the S&P. Part of this comes down to muscle memory. So the year of COVID is a good example. Retail investors were buying the dip in droves, and then they ended that year up about 30%. That was more than 4 times the overall market performance. Part of that success does come down to risk appetite. The top 3 stocks, it's pretty consistent. And right now, it's still Tesla, Palantir, and NVIDIA. Also got the Qs and a lot of the mega cap tech names. Profit taking, though, is kicking in at this point. Lowest net buying this week since April. And then Vanda also points out that traders are now cutting back on single stocks. They're turning a bit more to ETFs, guys.